Hi everyone! If you have a food delivery business idea in mind, this video is for you. Today we will be doing the overview of this financial model. Also, we will be covering the inputs that affect financial efficiency: revenues, costs, profit, payback period, and financing needed, and many others. The link to download this model will be placed in the description of this video. We can also automate your reporting environment using Excel or Power BI tools. You can also check out other financial models and Power BI tutorials for a business owner.
All links you will be able to find in the description of this video. If you find this content valuable, hit the subscribe button and give us a like. Share this video with your friends who have their own business. All inputs in our financial model are colored with blue. This will help us easily find and play with all inputs across the model.
First of all, we need to set up the first year of financial projections. This will be the year when investment stage begins. Next block of inputs will be covering when we get the first revenues, the start of operating activity, year and month. Then we will start describing different types of our customers. We will have 20 of them. We can name each type of customers the way we want.
Next column. Here we are setting up the price for the food delivery. This will be our revenues. Then we need to specify the margin that we are adding to the food costs. This column will automatically represent food cost inside the check for each type of customer. Here we can also specify the mileage to the customer and back. This will affect fuel costs, car maintenance, and so on. What we can do else, we can switch on and off each type of customers from calculations and see the cash flow statement with or without each type of customers.
If we purchase food before we get the revenues, then we set up 1 here. If we pay for the food from the revenues, then we place 0 here. Now we need to set up some limitations that will affect the amount of delivery cars that we will be buying. Here we are making the assumption of how many miles one delivery car will be making per each time interval. We have 4 intervals: morning, day, evening and night.
Next block of inputs deals with delivery car parameters, starting with price for a new car. Then we are making an assumption that when the car reaches specific mileage, we're going to sell it. It becomes an old one. This is the price of an old car that we will be selling. Then we specify the mileage when the car becomes an old one and it's time to sell it. Then we have 2 types of insurance payments, done once in a year.
Then we specify the transport tax, fuel consumption in liters per 100 kilometers, cost of fuel per 1 liter, and finally, car depreciation in months. Then we are taking 100% of customers of one single day and allocate these customers across time intervals for each day inside the typical week. Totals must be 100%.
Then we have the sales plan. This is the first month of operating activity, and here we are setting up the amount of customers per month for the first 36 months of operating activity. And then 37th month, we are going to extrapolate. Moving to fixed costs. Here we can specify the fixed cost items, and here their monthly values for the first 36 months of operating activity. Then we have extrapolation. Same logic.
Payroll. Here we are specifying the amount of people on each position plus extrapolation. Here we have the list of positions and salaries per person on each position. Moving to the investment plan. Green column is the month when we start our operating activity and get the first revenues. Now we are moving backwards. Here we are specifying what we are investing in. There is a chronology on the top, so in this area we are specifying how much we are investing in and when.
We may also have some investment plan after the start of operating activity. We can specify it here in the next block of inputs. Then we need to calculate the amount of weekdays inside every month of a typical year. Totals must be 365. This will also affect the amount of delivery cars that we will be buying. Then, we need to allocate 100% of customers across the typical week, from Monday to Saturday. Here, we're setting up some kind of limits that will affect the amount of cars that we need to operate this business.
Then we have two very important lines. First one shows us how many cars we need online this month with all the limitations that we set up previously. Next line illustrates us how many new car we need to buy to cope with our customers' orders. Pay attention. We're not setting up the amount of cars. We are calculating the amount of delivery cars according to amount of customers with respect to all limitations inside the typical day and typical week. This makes our investment plan more realistic and automatic.
Car maintenance. Here, we're setting up the odometer mileage when a car needs maintenance. Next line. We need to specify the cost for this maintenance. We may have several drivers on one delivery car. Here, we can specify their salaries. Also, delivery car may have some fixed costs. Here we can specify its monthly values. These costs will be calculated with respect to the amount of delivery cars that are online.
Moving to taxes. We have 6 types of taxes. Value-added tax, the tax base is added value. Asset tax, tax base is the asset's value at the end of the period. Salary tax, tax base will be the salary. Net profit tax, the tax base will be net profit from the P&L statement. Revenue tax, the tax base will be the revenues. Next possible tax, total revenues minus total costs including investment plan expenses. If you don't have this tax, simply put 0 here.
Here we can see the cash flow. We can press plus buttons to see the all details for revenues, direct costs, fixed costs, payroll and taxes, and investment plan. The result from operating activity will show us how much we earn without loan payment and investment plan expenses. The result from investment activity will show us what we need to invest in, how much, and when. Then we have the result from financing activity. During first stage of the project, it shows equity and loan inflow inside our business idea. On the second stage, it shows loan payments and how they correspond with the result from operating activity. The last line of the cash flow statement, which is cash balance at the end of the period, shows us on the first stage how your project consumes equity and loan. On the second stage, it shows us how much cash will be generated by your business idea by this or that moment in the future.
Then we need to specify discount rate for our project. It lives here. Next table is very important. It shows financials for the current scenario. Simple and discounted payback periods, profitability index, net income, net present value, equity, loan, and total financing needed. And finally, internal rate of return. Then we have 6 blocks of inputs for the loans that we may get. Amount of loan, or when we get this loan, year and month. Term of loan in months. Interest rate, grace periods for principal and interest payments in months.
Next output. Here we placed a very simple table showing us total revenues, total costs, and profit done monthly, plus loan coverage ratio.
Here we have tab with charts, starting with monthly charts. Simple and discounted payback periods, loan coverage ratio, total revenues and total costs, profit, profitability, cash balance at the end of the period, operating profit, and debt payments. Then we have the same charts but done yearly.
Next tab. Here we have the cash flow statement and income statement done yearly, plus main project numbers.
Then we have sensitivity analysis block consisting of yellow tabs for different parameters. Revenues, payroll, fixed costs, direct costs, investment plan expenses, interest rate, and loan amount.
We're adding this parameter to the revenues in this particular case and see financial efficiency if the value of this parameter will increase or decrease with this increment. We can press Sense button and see how financial model reacts if revenues or other costs will increase or decrease on this or that percentage value.
The link to download this model will be placed in the description of this video. We can also automate your reporting environment using Excel or Power BI tools. You can also check out other financial models and Power BI tutorials for a business owner. If you find this content valuable, please hit the subscribe button and give us a like. Share this video with your friends who have their own businesses. Stay tuned. See you in next videos.